gain. Nifty 0.4 up, mid caps 0.6, that's 2/3 of a percentage point higher. It's only the bank Nifty that's sulking today. It did so much of the legwork yesterday that today all the public sector banks have succumbed to profit taking. There is a bit of gain coming in the odd SBBJ, the Dhanlakshmi banks, the Karnataka banks, the Karur Vaishyas. These are the smaller banks that are in the green at this point in time, and a little bit of the private sector banks as well, HDFC Bank, IndusInd, but ICICI is not in that list, and that's why the bank Nifty as well is actually down about 0.1%. Barring that space, actually, we have a decent amount of green, and a lot of commodity stocks are also doing well. The top three gainers actually are Tata Steel, Vedanta, Hindalco, which is telling you something about the kind of short covering that's evident in this place. Well, that's the scene, and it's time we invited the market master for the morning. Gautam Chhaochharia, Head India Research at UBS Securities, joins us now. Gautam, good morning. Thank you very much for being with us. Well, we have to start with the banks since they have so much been the story of the last 3-4 days. They're catching their breath today, but if they did that for a goodish bit, would you go out and buy any of the PSU banks?
So we remain positive banks overall, and within that we also like the PSU banks space, okay, because both of the view on interest rates as well as the view on the SoE reforms theme which has been running.
The reforms story convinced you? Which part of it convinced you? And how might the banks be impacted?
So it's a tough one to say whether it will actually lead to the SoE banks replicating, say, private banks' best practices 5 years down the line. That's a tough one to say because all these reform measures done till now or required will be in steps. There will be ups and downs. But the thing is, the direction is definitely positive. The valuations are very, very supportive. And therefore, the risk reward definitely seems to be attractive at these levels.
So what are your top picks in this space, Gautam?
So our top pick remains SBI in SoE banks.
Okay, fair
Only
enough.
one? I mean, you aren't convinced with the change of personnel, etc. in the other banks?
So yeah, broadly as a sector, yes, we continue to go over it, but that's the top pick for us in the model portfolio.
Okay. The other space that has been a big beneficiary of the rupee depreciation is the IT space, and you know that's been the pocket to be in this month. But you are negative on a stock like Infosys. You were not convinced with the changes that Vishal Sikka has made, and how would you approach the space in general?
No, I think he's obviously moving in the right direction, but our views on the overall sector and what's priced in at these levels, and not just on Infosys specifically. And a view is that the move towards digital is actually not priced in or looked at realistically in our view by the market, because this is disruptive, and for a change, the Indian IT services companies are incumbents rather than the ones who are bringing in innovation. So for them to transform their business completely over the next 3 to 5 years and still maintain double-digit earnings growth, which is what's factored in, that seems a bit challenging in our view.
Okay. Overall, what did the earnings season tell you by way of trends, Gautam? Did it give you a sense that the number of downgrades are at least declining, or did you have to downgrade quite a few?
So earnings estimate still is on the way down in terms of being cut. Oh. But yes, in terms of it missing in a big way, like it happened in the fourth quarter, that's definitely improved at the margin. So in terms of negative surprises per se, it's improved. But yes, in terms of overall tone, tenor, is still muted, and we still see sharp earnings cuts ahead for the market as a whole.
Okay. There has been, of course, a lot of discussion on this urban demand recovery theme. You buy that story?
So in a mild way, yes, but not to the extent which is the way it is being talked about in the market, or is being reflected in specific sectors of stocks. Because urban consumption recovery will also happen in any meaningful way when there is an urban income recovery. The impact of even lower commodities, etc., on inflation and therefore urban real incomes has also been very, very mild. There's been no real job increase or improvement as we speak. So the so-called urban consumption recovery, in our view, is again very, very muted. Will again take time to play out.
So what do you think is the next positive trigger for the market, Gautam, either global or local, that can take it above this range of 8,300 to 8,600?
So I think the phase of big reforms, etc., acting as catalyst is largely behind us. Of course, they will keep on playing a role of hygiene factor, but not as a big catalyst per se. In our view, the big positive surprise ahead is interest rates. So we continue to believe since last year that there is a strong disinflation process in India, and that's the area where markets will keep on being surprised positively. So we're still expecting and maintaining a view that there will be 75 basis point rate cut by the RBI by March of 16, and that should be the positive catalyst for markets.
Oh yes, it's quite a bit going by what the RBI has led us to believe so far. While on that theme, Gautam, can you lay out for us what your global team is telling you about the US Fed? That move possibly on September 17th could keep the Reserve Bank from moving very quickly. Exactly what plays out on September 17th if it does? And at that time, do you expect a reasonable amount of volatility surrounding Indian currencies as well?
So our house view is that we do expect a rate increase in September. But our house view also is it will not be a big event for global risk assets per se, and including for India. So we don't really expect any meaningful volatility. Obviously, there's always a short-term market vicious cycle. But our base case is we don't really expect meaningful volatility. We also don't think RBI will necessarily look at that event as a critical event to act on its rate cycle. I think the critical event for RBI still remains on the inflation data points and the comfort it gets around that.
The other space that you have been bullish on is the pharma space, and this month we've seen good gains come in from the likes of Sun Pharma, Lupin, etc. How do you approach this space? Do you still stick to the tier 1, the nifty names, or do you look outside the index where there could be better returns?
So broadly we are positive on this space, but obviously our preferred picks are the bigger names. The theme is apart from obviously the stock and sector being more reasonable now compared to say 3-4 months back. The other theme is that in our analysis we don't really expect any generic market opportunity to face a cliff or downside over the medium term. In fact, we see the opportunity to grow bigger from here on. And that's what gives us confidence that these companies can continue to do well, specifically given they've already achieved meaningful scale and they're well placed to gain even bigger market share in the US.
What else are you overweight on? You have these a couple of pharma stocks you like, and you said that even in the financial space, you appear to me a little choosy, though overall you say that the lowering RBI rates will give it a positive bump up. Outside these, are there any choices?
In terms of sectors?
Yes.
So we continue to like telecom, we continue to like oil and gas. These two continue to be overweight sectors for us apart from financials and pharmaceuticals.
Okay, is there nothing in the capital goods space that impressed you? We had the odd Cummins reporting very good numbers and a couple of others as well. L&T's order book at least was very good, even if not the actual execution in the quarter under review. In that space, do you see any early signs of probably CapEx having a positive hue?
Quite to the contrary. In fact, we are underweight that space,
Okay.
primarily because, again, the expectations and the extrapolation of these early green shoots seems to be overdone. In fact, our analysis shows that the scale and extent of CapEx cycle-based recovery will again disappoint investors over the next couple of years.
Okay. One final question then, Gautam. How do you approach the auto space now? Do you continue putting money into winners like Maruti despite high valuations, or do you now start looking at some of the beaten down names like Tata Motors, M&M, etc.?
So absolutely, I think the Maruti is the only name out there which we are pushing or is part of our model portfolio, despite high valuations, because top down we continue to see potential for upside surprise in terms of earnings, because there is a specific micro market angle in terms of how Maruti is positioned, and secondly, the extent of pent up demand in that space is just too huge.
Okay, finally, I wanted to ask you, Gautam, it's not a great deal, but over the past 1 week, we have got about a 4% depreciation of the currency. Does that play out in any fashion in terms of choice of stocks?
Not really. Again, 3-4%, specifically when it's a catch-up versus other emerging market currencies over the last few months, is not really a big deal. Only if you see a meaningful move beyond 3-4%. So, for example, if the currency had moved or will move 18%, then obviously it becomes a more meaningful delta for stock selection.
All right, we'll leave it at that. Thanks for discussing all of those stocks and sectors and giving us your market view. Gautam Chhaochharia, have a good day and a good week. Well, that's the word coming in.